Yo, what's up, guys? Another trade recap. Let's quickly recall the strategy. So, if the 4 hours bullish, want to see a low time frame sweep, 1 minute break to the downside, 1 minute confluence, and then enter, and then target the higher time frame point of interest to fulfill the bullish bias. And then once the higher time frame POI has been hit, we get a 5 minute break to the upside, a 5 minute confluence, 1 minute execution. That's our strategy for the day. Now, the 4 hour is bullish. 4 hours bullish. We weren't trading yesterday because if we just have a look, where's market open today? Here. No volume, just fingernails the whole time. Nasty, nasty little fingernails. So, we just didn't bother looking at ES today. But NQ was not fingernails. So the 4 hours bullish. So we want to see low time frame highs get swept to move lower first. So we had 15-minute highs over here. We had highs here. These are the main highs that we were looking for. These right before market open. These 5-minute highs to get swept out. On the 1 minute, we push up straight away, sweep those highs, and sweep these highs out. I know these have already been swept, but if you think about it, the liquidity sits above here because this move swept out that liquidity, but there's still liquidity sat there. Like, there's not liquidity up here, there's liquidity up here. Because that's just one big wick. That was the sweep of this liquidity, so that's still a liquidity point. I think TJR covers that in Bootcamp 2.0. I'm not sure. But so we see that low time frame highs get swept. That's what we want. We then get a 1 minute break of structure. This is the low, move down, move up, close below it. And we had this 1 minute imbalance. Now I see we come up and we got equilibrium from the high to the low. We come up into the imbalance, into equilibrium. I was going to enter off any bearish close, so any black candle close, and I'll enter. Didn't get that, so I didn't enter. We had this 1 minute order block. This is the move that swept out that liquidity. And this liquidity up here. That blue candle, so the entire blue candle is our order block on the 1 minute, marked out with this blue line. We come up, we hit the blue line. We're already in equilibrium. So I was waiting for any black candle close. We get that here. As I click sell, we've already pushed back up to here. So it's a perfect entry at the top of that wick. Couldn't have got a better entry. Now where were our targets? Our targets were the higher time frame point of interest. So hourly lows. This low here. Hourly low. And hourly lows here. Now I set up just one take profit, and it was those hourly lows here, and we can see the trade won. Now, here's a mistake for today, because we always make mistakes, and that's the point of trading on demo. The mistake of the day was this trade was running, but we saw a 5-minute break of structure back to the upside. Here, that high got closed above, so I exited my position for a 0.28 RR trade. I'm pretty sure it was. Yeah. So that's where I exited because the 5-minute broke structure. And in my head, what's our strategy? High time frame POI gets hit, 5-minute break, then we start moving higher and fulfill the overall bias. So we had this 30-minute imbalance here. And I treated this as our high time frame POI. And we were in that, and we were also in 30-minute equilibrium. So I was like, oh my god, we're going to go higher. close my trade now because the 5 minute broke structure, as you can see here. But this is what I'll be learning today. 30-minute is not a high time frame POI. 1 hour or 4 hour is. So there was no imbalance on the hourly. The first hourly point of interest was the low. So we should not treat a 5 minute break of structure as our strategy continued unless that hourly or 4 hourly point of interest has been hit. I wrote in my trading journal, 30-minute point of interest does not count as a high time frame point of interest. So only consider the 5 minute break of structure to be valid to move higher after the hour or 4 hourly liquidity, for example, has been swept. So that's what we've learned for today. Just refining our strategy. But as you can see, our take profit would have been smacked. These lows here didn't, in fact, not get smacked. But this 15-minute order block did that I had marked out. Just as like an extra bit of confluence, as you can see. Moved down and swept this liquidity, 15-minute order block, that got hit. But our take profit was here. 1.26 IRR would have been hit, but we exited here because the 5 minute broke. But we now know only look for 5 minute breaks once hourly or 4 hourly points of interest have been hit. So that's our learning curve for today. We made $120 because we risked 0.43, so $430, and it was a 0.28 IRR when we closed, so that's $120. It would have been $541, and if we risked a full percent, it would have been $11.26. But no, $12.60. But it was bank holiday, so I didn't want to risk a lot. As you can see, there was not a lot of volume at all. If we look at the 1 minute, it is not a lot of volume, a lot of candle gaps, not a lot of wicks. Minimal volume for a bank holiday day. So we treaded lightly. But either way, that was the trade we took. Low time frame highs, 1 minute break, 1 minute order block, 1 minute equilibrium, bearish candle close, enter long, target, 1 hour lows. Bing bang bot, strategy works. It's just we should have set the trade and left it because we didn't need to exit there. It was foolish of me. Now, on to part 2 of the strategy. We can get rid of all of this now. None of this is relevant anymore. Our high time frame point of interest. Hourly lows here, swept. 5 minute break of structure. There's the high, no close above. There's the most recent high, close above it here. 5 minute imbalance. And 5 minute equilibrium. Wait for a 1 minute break of structure. There's the high. No, there's the most recent high. Yep, enter in there. We didn't enter this trade on our paper trading account because I was doing maths revision for my exam tomorrow, so I didn't enter this. But this is the strategy continued. So there's our entry off that 1 minute break. First target would have been these highs. Our stops were 10 ticks below the 5 minute imbalance. First take profit would have been there. Hit for 1.13. Move stops to break even. Would have been stopped out the rest. And our other take profit would have been those highs there. So that's obviously hit TP1 and then stopped out. But either way, our strategy, get it back up. It's mainly just this stuff. The rest of this, I don't know what all of this is. I haven't read it in ages. But this is the stuff that I've backtested the past 2 weeks on. 3 weeks actually. And seems to be working quite well right now. This is just overall strategy. This is just biases sort of thing. But this has been working quite well. Worked again today on NQ, so I'm fairly confident in this strategy now. I'm happy to take trades when it reveals itself. It's just today was a bank holiday, so not a lot of volume. ES was just like, ES moved the same, but just fingernails. Don't want to trade that really. Tomorrow we will not be trading. I have an exam, but we've got news at 1:30. And Friday I will not be trading because I'm out. But overall, positive trading day, and that's wrapping up the week for me. And that is wrapping up this video. So, peace out.